How are we doing today, guys? Johnny Crypto back here. Just gonna do another short little video update. I'm trying to narrow down my YouTube channels. So for all of you that have made it to the new one, thank you. And for those of you that are still on the other two, I will be closing them down. So I'll be changing my account profile with an informative update and the link to get to the new account, so you guys can still keep up to date with me and my trades. So with that being said, let's get straight into it. So now it looks like that we've put a definitive top on this latest bull trend, our run up here, and some are calling it a double top. So if we can see right here, and I guess if you're just kind of eyeing it, that could be another top as well. And then we have others saying that this whole area up here was more or less just a blow off top. Kind of an exuberant move, irrational. So if you discount that, then sure, it is a double top. But I'm not really sure. I don't even think it's really worth the energy these guys are putting into arguing over that right now. The question now is, how do we play this? Okay, so being a swing trader, a day trader, I trade in both directions. So for those of you who don't short, this video won't be very helpful to you. As you all know from my last video, I had been out of position for quite a while, waiting to see how this consolidation range would stack up. And then once we got a pretty firm denial here, I started looking for some short entry points. I'd love to tell you guys that I got in here, but I didn't because I'm not that good of a trader, but I'm pretty fucking good. Instead, I waited and waited and waited until we made a lower low, which was right here, and we'll get that guy off of there. Actually, nope, I just lied to everybody. Sorry. Initially I got in right here on this little pop-up right there, but my position size was so small, it's pretty negligible. It was honestly more or less kind of a gamble trade. I wanted to get a foot in the water in case it did continue to go down. I could add to my position. And I had some trigger orders set. Unfortunately, because of the large amount of volume in this candle, they were not hit, so my position was not increased. Luckily, because as we retraced back up here, and if we blasted through this 0.382 line, I was going to have to close my short. We didn't, so I loaded back up here on what was the right shoulder of a head and shoulders pattern formation. This is actually pretty interesting because in my own personal opinion, whoops, let's get out a little bit here. Everybody was looking at the head and shoulders being this inverted one right here, 1, 2, 3. And depending on how you look at it, it technically did break upwards, right? Because in order to have a confirmed head and shoulders play out, the neckline needs to be broken. If you were to ask me, I would have said that this was the neckline, right? We're not... maybe right here. Because this was a downward sloping pattern, and now it wouldn't have quite gone up as far as most projections would have said. And just to remind everybody, the way that you would read this would be you would take this move from the head. Let's get our line back here. Top of the head down to the neckline. And then it will be about that distance. You could expect the breakout from the neckline. If we actually right click clone, we can drag up our pull. So where's that right shoulder? So it would have been right here. So that would have been where you would have been looking to exit. And it would have actually lined up pretty nicely with the 0.618 fib for this whole downwards movement that we just saw from here, all the way down to there. Get those lines out of the way. And that would have been a hit on the golden fib. So if I had been trying to play this bullishly, that's also what I would have said as well. I would have said that we would have broken up and hit that 0.618, and then of course gotten ruined because we did not in fact continue up. Instead, we started playing off of these fib lines now for this bearish move. So the first contact we had was actually of support on the 0.236 right here. And we had a nice little bit of volume here. If everyone was paying attention, that was quite a decent sized spike. And now we proceeded to get denied at the 0.382 which is one of my favorite lines besides the 0.618, the golden fib to trade. There's no evidence behind that. I just feel like the 0.382 is usually kind of the better or safer one to look for positions and entries at. So that being said, so I had added to my short position here as we came down off of the shoulder, and then as we got denied once again, I added the final touch to my bearish position, my short on the 0.236, which at the current moment looks like it is forming some resistance. And once again, I'm not sure. I haven't actually been including the volume profile, the visible range in my videos. So that's what you see on the right side of the chart there. This basically tells us that within the range, kind of from here down to here, where you see the bars are lighter and colored, that is where you tend to see the bulk of the volume. That's a consolidation range, and as we can see in the trend, most of the movement was in this range here. And what you can usually expect is this whole area kind of acts, it's kind of like moving through sludge. You see a lot less volatility. You begin to get your volatility, as you can see here, when we get outside of this range. So you get a big lick up and then right back down, and obviously up here, up and down. And that just tends to be because as you can see, there hasn't been much trading up in this range, and so the order books tend to be relatively empty. So it's pretty easy for anybody with a decent sum of money to drop a bomb on the sell book and drive the price way, way, way high. What I mean by dropping a bomb on the sell book is hitting a market buy order with a substantial sum of money, enough to essentially clear the book, and that'll kick off major volatility in the markets. So I'll move this out of the way. Sorry about that for the whole video. So this is the 4 hour, as most of you know. Those of you who've been keeping tabs on my videos, I do trade the 4 hour mostly, but always a good idea to take a look at a longer time frame. So here's the daily. The only thing I'm going to say about this, I see a lot of people, a lot of the bears, oh, we got our fids back on, are kind of looking at this as what could be a macro scale head and shoulders if we get our shoulder over here. The volume profile would match. We are seeing an increase in volume. But we haven't even seen, guys, the beginning of a right shoulder yet. So, and in my opinion, it's since it's the daily chart, that's a bit too far in the future for me to be speculating on right now. That being said, on the bottom here we have our choppiness index. This is one of my favorite indicators. This basically, you can think of this as the gas tank. It's what one of my friends in the business calls it. And that basically, this is because when this yellow line gets to the top, that means that the trend is wound up and ready to go. The gas tank is full. We're ready to floor it, and we're ready for a rip. And then, as you can see, let's take right here for an example, our last kind of run up. We were sitting in the middle, so it wasn't quite that high, but as the trend exploded, gas tank is drained. Finally, we bottom out, and then consolidation as we fill the tank again. That being said, the chop or the choppiness indicator is sitting above the center line, the 50, which means that if a move does occur, we could see a decent amount of give of size behind that move. Then we're going to move on to the weekly here. This is another interesting point that I'm not going to call him my friend, but I've been watching his videos, and I'm quite a fan of his. If you've ever seen his videos, you guys should definitely, if you haven't seen his videos, you should definitely check them out. His name is Crypto Kirby. That's the name of his account. I don't know the guy. He sounds like he's from the Midwest, but he is extremely knowledgeable in technical analysis. He's an excellent technical analyst, and he always throws something new in his video. This indicator on the bottom is I learned about from him. It's called the NVT. The network value to the network to transaction value ratio. So basically, this measures the amount of transaction volume on Bitcoin's blockchain. And compares that to the price as a ratio, and then we get a sense of whether or not there's not enough activity on the blockchain to kind of warrant the price level that we're currently at. So as we can see, the NVT had turned red up here. This indicator, by the way, has successfully predicted with 100% accuracy all of the major macro price trend changes with Bitcoin. So we see flashed red here right before the famous dump, right after the famous run up to 22K. And then once again, we saw it flickering, flickering, flickering. And for our dump off down from 6,100. Those of you that were following my videos back then know that we were very happy with this move, and everybody was able to make themselves quite a large return. And now, once again, not only have we seen it turn red, but we also have what seems like a head and shoulders in the NVT forming. So that, in addition, this is another point that Curbs I got from one of his videos, is that this, if you draw the fib from the bearish fib from the top of the 22K peak to the bottom, the line, the ceiling of this recent trend move was the 0.618, the golden fib, and that being on a weekly time frame is very significant. Okay, so this was a major reason as to why I had stopped trading this trend with a bearish bias in terms of as in going long, and instead have now switched my tactics to net short. So most, if not all, positions, especially longer term trades I take, are going to be short. So that just about covers it, guys. Let me just go back here. Let's see if so I'll just actually, you know what? No, I'm not. I was gonna add another point, but that'll be tomorrow. We got to see what happens here. So once again, entry points were right about here in this area. Currently net short. We're going to see what happens. Now my target for these current trades, the first will be to watch if we have a double bottom here, which would kind of suck for me because I wouldn't really see much return out of these positions that I'm in right now. And the second downside target, get out of here, little guy. So the second downside target, and this is kind of my more preferred target, would be right down around the 6,000. I would say as low as 6,000. But I could see us putting the brakes on first around 8,000. Okay, so right where we see this massive spike from the volume, the visible volume profile, that's where I could see the us really going. And if we go much farther past that, I will not be wagering much on that. I would kind of wait until we see what the new consolidation range is going to be, and as they say, get out of the casino while I'm still up. So that being said, I'm going to sign off now. This is a short video. I like to keep them short and sweet. I will be seeing you guys tomorrow, so stay tuned for that update. And until then, stay safe. Make sure you set your stop losses and never risk more than you're willing to lose, guys. All right, take it easy.